Okay, so everybody, I'm going to talk a little bit on the fast side, and the reason is because this is usually a 50 or 55-minute presentation. So I'm going to try to get as much content in as possible. My presentations are typically more on the learning side, so I ask that you have a pencil, or if you're feeling very confident, a pen and some paper to take notes, or if you're taking notes electronically, great, but you're going to get a lot of information. Let's get going. So I want to start off, this is something that my mentor posted a few months ago, and it's something that I want to make sure it was perfect for April. He said, I just hate to be the guy to break this to you, but most of the self-described experts out there have their heads firmly up there, and I won't say this word. There are shortcuts to success, but none involve magic. Shame on you if you get involved in some scheme that you know sounds too good to be true. Now, I have myself purchased many programs over the years that were too good to be too good to be true, and I just want you to make sure you trust the hairs on the back of your neck when you're listening to someone speak before you start handing them some money, okay? This was just perfectly posted because especially back in April, there were a lot of programs out there that, man, you could, like crypto programs and things like this, that you could give your money and you'd never see your money again. Okay, I want you to look at this chart really quick. I know some of you like to look at charts, some of you maybe not so much, but I'd like you to look at this chart because on this chart, you see something that typically is not a tradable pattern. This is a sideways choppy pattern. And I want you to look at this chart because we're going to bring it back towards the end of the presentation and show you how we can make a lot of income off of this chart. And I want to make sure you have this kind of solidified in your brains. Okay. So here are some facts. First of all, a lot of uncertainty is happening in the world right now with the Federal Open Market Committee or the other central banks around the world. We've got conflicts in Eastern Europe. We've got inflation at all-time highs around the world. But what's happening in the markets, if you play it right, it can set you up for months, if not years to come. Because even though the talking heads you'll understand are not my favorite people, but the talking heads like to tell us that, oh my gosh, $4 trillion of 401k money disappeared today or something like this, right? These big headlines. But in the markets, money is actually not, it doesn't disappear. It's not created or destroyed. It simply moves from one person's hand to the other. That's how the markets work, right? Somebody is a winner and somebody doesn't win. So the key is making sure you're on the correct side of the transactions. And that's what we do here at Trading Trainers. So first thing I'd like to know is what would be ideal for you? And you can just type your answer into that question and answer area. Are you looking to learn how to invest to make low risk and high return? In other words, be a fisherman, be 100% self-reliant? Or are you learning how to invest but have seasoned investors reviewing your investments, be in kind of a group and make sure that people look over your shoulder? So learn how to fish but have expert fishermen there to help. Or are you following what seasoned investors do in their portfolio? Would you rather just fish alongside expert fishermen and look over their shoulder and do what they do, or something else? Let me know in the Q&A because I can tailor today's presentation specifically to the majority of the folks who are here. Okay, we're getting a little smattering of all of them. We've got some people who want to be self-reliant. We've got some people who just want to look over the shoulders. Okay, I'll make sure I cover everything. That's good. Thank you. I always like to do this just to make sure we're on the same page. If you've seen this, just humor me. If somebody gave you $50,000 today, would you take it? Or if they offered you a penny that doubles every day for a month, would you take the second? Now remember, if you take the second, the penny that doubles every day for a month, it requires some activity. It requires a little bit of work. All right, let's go with the penny because we know what $50,000 is. But if you go for the penny, don't forget you're putting in some effort here to make it double every day. Well, by the end of the first week of the month, remember a month has roughly about 4 weeks in it. After the end of the first week, we're kind of regretting not taking the $50,000, right? Because we only have 64 cents. At the end of the 10 days, which is about 1/3 of the way, we still are kind of regretting this because we're like 1/10,000th of the way to $50,000. We've got $5.12 to our name, and we've had to put in effort. For the $50,000, we just took the money up front, whereas here we've had to put in effort every day to get our money to double. Okay, day 11, 12, 13. Here we are at the end of 2 weeks. We're at $81.92, still nowhere near $50,000. We're almost about halfway through the month. Maybe we're questioning our decision. All right. Here we are at 3 weeks. Now, at 3 weeks, we're about 3/4 of the way through the month. And we're still not at $50,000. We've been putting in all this effort. Will it pay off in the back end? Let's see. All right. Day 24, we're almost done with the month, but at day 24, we've surpassed $50,000. And by the end of a 31-day month, we have $21,474,836.48. But I want you to realize that you have to stay consistent and do something even though it looks like it's not paying back big returns in order to get the returns on the back end, right? This is a demonstration of compound interest. I'm not sure if Albert Einstein actually said this, but compound interest is the most powerful force in the universe, and I agree with that. So take a look at this chart. Again, this is one of those charts. I'm going to come back at the end. I'm going to watch my time carefully. Come back at the end. This chart's going to make a lot more sense, but just realize a couple of things. Number one, that this is moving up and exponentially gaining. It's not just gaining linearly. And also that if this is the zero line, it very quickly becomes past, risk-free. It becomes risk-free very early on, and then whether it goes below the gray line or above the yellow line, it looks like you make pretty good returns. We'll talk about this more, but I wanted to put this image in your head. So, okay, coming back to the topic of compound interest, what if instead of doubling our money every day, we double our money every year? Well, what would be our target? I always like to have targets, right? What would be our target with simple interest if we wanted to double our money every year? We'd have to take our portfolio and we'd have to earn 6%. If we earn 6% every month on our portfolio, our investments will more than double every year. Now, I just want to emphasize, I've got a few folks who are working, more than a few, in my program, and we're actually doubling our money every 5, some of us 6 months right now, and that means that we're earning more than 6%, right? Greater than or more than this 6%. But we like to have a target to aim for, shoot for the moon, maybe you'll get to the stars, right? So that means, by the way, if you've got an $1,000 portfolio, it's going to be about $2,012 in 12 months, $4,048 in 2 years. 5 years, you have about $33,000, and in 10 years, you're a bona fide millionaire. But even more, if you grow your portfolio to a $100,000 portfolio, every year your $100,000 portfolio can generate $101,219.65 if you focus on that 6% per month and hit that target. Now, that's more than the median salaried income, and this is letting your money work for you versus working 60 hours a week, the median salary income here in the United States. Now, I'm not counting those folks of you that are living on the coastal cities because we know it's a lot more, but the overall median income is around $87,000 here in the United States. And here you let your money work for you. Okay, so what are we doing? So what we're doing is we're selling theta decay optimized option premium. And you're probably saying, AJ, what the heck does that mean? Well, it means we're profiting on time passing by, one of the most reliable variables, by the way. So before I go any further, I'd like to know A, B, C, or D, just a review. It's going to get more difficult than this, by the way, but just a review. What minimum returns must you make monthly on your portfolio if you want to double it annually? 0.5% A, 1.5% B, 5% C, 6% D, or 10% E. Which one is it? A, B, C, D, or E? I see the answers coming in. And if you put down D, that's great, because that means you've been paying attention. You might be saying, okay, you said something about options. Aren't those things risky? Well, think about when you buy and sell stocks. So when you buy and sell stocks, typically you only make money if the stock goes up. If you're smart enough and you know how to short stocks or even commodities or whatever investment, you know how to make money when the market goes down. But options give us the ability to make money when the market goes sideways as well. It also allows us to make money on time passing by. And get this, options allow us to make money when there is fear or confidence in the market. You just need to know how to arrange them into strategies and which options to choose, expiration dates and strike prices. So people think options are risky. Actually, options do the opposite. If they're used correctly, they remove risk and they give us opportunities to profit on patterns that otherwise we would not be able to profit on. So some of you might be asking, what is an option? Okay. In the strict sense of the word, it's a financial instrument that they call a derivative. And they're typically bought and sold when big money traders want to hedge risks on their stocks, their indexes, their ETFs. But how we're using them is we're selling their premium to generate monthly income, or even more. If people use weekly options, it can be more often than monthly. How many of you, because I can skip these next slides, let me just ask you with a little yes or no in the question answer area. Do you guys already know who I am? You've already either gotten some of my materials or you've listened to some of my presentations? Because I don't have to cover this section so much. A lot of no's. One yes, but mostly no's. No, a couple yeses and even more. Okay, let me just cover this very quickly. You can find me all over the web, right? And the easiest way to find that, in fact, you can just call me if you wanted. That's our business phone number right there. But I'm on Twitter, Facebook, YouTube. In fact, I do a really fantastic YouTube show every Friday morning. So if you want to check that out, just go find us on YouTube and subscribe and turn on notifications. But I founded this company called Trading Trainer. People call me the world's most disciplined options trader. At least they call me that to my face. I think behind my back, they call me the world's most laziest options trader. I like to think of myself as the most efficient option trader because I don't like to spend, besides the making sure I maximize rewards and minimize risk, I don't like to spend much time in front of the computer. So I like to automate things with automatic traders. I also like to do a lot of end of day stuff, right? And so I've minimized the amount of effort, the amount of emotional, the other thing, if you don't do options correctly, you can be on an emotional roller coaster. Some days you can be very manic and other days you can be very depressed and not want to get out from under your covers if you don't use options correctly. So I like to minimize emotional problems. And I also like to minimize my time because I've got stuff to do. I just had I was talking to Anna before we got on the call live. I just had a baby, right? What was a 50-year-old thinking about having a newborn? But we just have been, so I've got a newborn that I'm trying to hang out with, and the last thing I want to do is be stuck to my computer. I've been doing this option stuff since 1997, and with my trading trainer folks, I've been publishing my daily insights, gosh, 5 days a week since 2002. You might see this ebook on a lot of people's computer. I wrote this ebook almost 17 years ago, and everybody seems to have a copy of it, which is great. I also have that home study course that you'll see on Successful Options Traders courses. My main thing is I'm a learner, and so I'm still buying people's courses all the time. I've also got a degree in mechanical engineering. I focus on automatic controls, the marrying of electrical and mechanical engineering. That was my degree. I've also got a very strong background in something called commercial business and investing. And in the last 15 years, I've spent a lot of time taking teaching courses so I can better convey the stuff I know to people like you. And I want you to know that when I started in 1997, not only did I spend $27,000 on seminars that first year, and I'm sure some of you remember back in the 90s, you didn't go and log into webinars. Instead, you had to go to a hotel for like half a day on a Saturday, and then they'd make you pay to come back for all day Sunday, and then you'd have to fly somewhere in order to get the real education. You'd go to a destination for like 3 days, pay for hotels. I spent $27,000, but not only that, I gave back $85,000 back to the market while making a lot of stupid investments, trying to follow the stuff. And so that kind of sucked. It was a good thing I was single and I didn't have a big mortgage payment on my home. I was living in Silicon Valley working for a company called Hewlett Packard. So I had the money to lose, but it was almost like I went to college a second time. Here, I'm going to give you some really important notes. This is how you can be a successful. This is off the topic of options, but no matter what you decide to pursue, whether it be Forex, commodities, stocks, options, futures, first of all, pick one thing that fits your lifestyle and stop chasing shiny objects, right? Settle on one type of investing and master that thing, right? Because people who jump from topic to topic, crypto, whatever seems to be hot at the moment, you're the ones who never make any money in the long term. Number two, hire a mentor. That's what I wound up doing, who is currently doing what you want to be doing and also knows how to teach. Because if you find somebody who's doing what you want to be doing, but they can't teach you, that sucks too, right? So learn from this thing called guided discovery. It's so much easier and so much less expensive than trial and error. 3, I need you to join an investment group. I need you to talk to people about what you're doing. Plus, you can look over each other's shoulders. It's called leveraging with pride. When we were back in elementary school, they called this cheating. But in the real world, like I learned this at HP, when Epson came out with a new printer, we didn't just start from scratch. We bought their printer and we took it all apart, learned how it worked, and then we made a variation, right? That's called leveraging with pride. And that's what you can do in an investment group with other people's trades. Plus, you put your trade, and if your trade looks stupid, somebody's going to say to you, don't do that trade. It looks stupid, right? So get yourself in an investment group. And finally, surround yourself with like-minded investors, because especially with things like options and futures, which are derivatives, the average Joe out there is going to tell you, oh my gosh, that's so risky. I don't know anything about it, but I don't think you should do this. And those little negative words, instead, you want to be around people who are like, oh yeah, you lost to your stop loss order. No problem. You'll gain it back tomorrow, right? You want to have people who are not going to be bringing you down. This is exactly what I did. And it changed me from being a loser in those first few years to being a winner moving on, right? So I want you to make sure you took some notes on that. Last but not least about me, I started a foundation, and I want everybody to know I take historically underserved inner city kids off the street and I teach them how to invest. In fact, this is a picture of the first group I worked with back in 2003. They've all grown up. In fact, here's something interesting. I gave them each $2,000 back then, thinking I'd never see that money again, that I'd have to write it off my taxes or something. They each paid me back within 6 months of starting with me. And not only that, one of them went off and he's a professor of finance at Denver University, which is really awesome. They all went off to doing amazing things. In fact, we had to do that first class in a public library. I don't know if you remember back to 2003, but the fastest internet libraries had was called DSL, digital subscriber lines. And they only let us, because it was at a commodity, they only let us be on the computers for 30 minutes a day before they kicked us off. So we had to figure out how to do our investing in 30 minutes a day at the library. And so if I can do it in those situations, then I'm sure I can do it in today's situations, right? In fact, now we've partnered with the Chicago Board of Options Exchange, and we rolled this program out to the kids in inner city or South Side Chicago. And every year we graduate over 200 folks. So I'm kind of excited about the foundation. That's why I do this. So let's get back to the topic of options. How do we sell premium? There's 4 simple transactions. By the way, somebody wrote in, can I trade options if I don't even really know about stocks? Absolutely, right? Follow along with the rest of this presentation and see if you can follow along or if I lose you along the way. But you just need to follow, if I go back, follow these. Pick one thing that fits your lifestyle. And that's what I think a lot of people make a mistake on. A lot of people pick something that looks exciting, and then they realize that they have to be a day trader at 2 a.m. in the morning, and that doesn't fit, anybody's. I remember about 10 years ago, Forex was the hottest thing. Everybody was, wanting to do Forex, and then they realized, I can't be a day trader at 2 a.m. in the morning. I got to sleep. So something to think about. So here are the 4 simple transactions. We like to write covered calls. We especially in these days like to write covered puts. That's where you flip the covered call upside down and you can make money if the market crashes on you. We like to write covered calls against leaps, and we like to write covered puts against leaps. We call that supercharging, and for you academics out there, it's the bull call diagonal debit spreads and bear put diagonal debit spreads. Now, one thing that's interesting as well, because a lot of people do this in their retirement accounts, is these ones right here are cash trades. So they work really well in most people's retirement accounts. This one right here, this covered put one, this one is a margin account. So you're only going to be able to do that in your retail account. So not in your retirement account. But also I want you to notice that these are links. So in other words, this is a variation of this one, and this is a variation of this one. So if you don't have a margin account, you're not trading on margin, that's fine. Just do bear put diagonal debit spreads and you'll get the same effect, right? So not all is lost with one strategy or the other. So I keep using this word option premium. You might be saying, what the heck is that? An options price, when you look up the price of an option, it has 2 components in it. One that we call the in the money value. You academics out there might call it the intrinsic value. The other component is called the premium value or time value. I hate that name because time, there's a lot more into the premium value than just time. And some people who are academics call it the extrinsic value. But when you look at that option price, you have to realize that it's the in the money value and the premium value. What we're doing is we're optimizing our option selection so that we get the most premium value and we sell that thing. So here's an example. This is Ford stock. These are the prices from yesterday's close. If I bought at yesterday's close some Ford stock, I would have paid $12.13 shares for Ford stock. Then I could turn around and immediately sell back the Ford November 18 $13 call. This thing is going to expire on November 18th, and the strike price is $13. I'm going to get 40 cents for selling those things. So that's going to give me a discount on Ford stock. It's also going to act like an expiring coupon because as it approaches November 18th, it's going to go down in value. I'm not going to have to use that 40 cents. It's going to create for me basically an instant dividend of $40 per option contract sold. That's because options are sold in lots of 100 shares. They're called contracts. Okay, so let's run through the scenarios. This is, by the way, the covered call strategy. I don't think I'll have time to talk about the covered put, which is a shame because, man, that's an awesome strategy. But let's talk about the covered call. So if Ford closes above $13 on November 18th, we will have paid $12.13 for the Ford shares. We'll get $13 for being exercised. That gives us an 87-cent per share profit. Plus, don't forget, we collected 40 cents for selling that call up front for a total profit per share of $1.27. That's 10.8% ROI. My ebook is sold off my website, tradingtrainer.com. 10.8% ROI. I self-published it. Now, if Ford is flat, now this is actually the ideal case. We actually like Ford to be flat. So if Ford goes sideways and flat on November 18th, by November 18th, we'll have paid $12.13 per share for Ford. We would have gotten that 40 cents back. Keep the 40 cents because the option expires worthless. We've made 3.4% ROI so far, and we're going to do it again and again and again and again. You're starting to get the picture, but you might say 3.4%. We wanted to target 6%. So stay tuned. Stay tuned. Give me about 3 more minutes, and we're going to get to that. But before we do that, I want to show you that was a theoretical trade that I got from yesterday. Here's a trade that my users and I did on American Airlines this past month, right? Because options expired on September 16th. The options for this month, the monthly options for this month expire tomorrow. So we're going to have a whole bunch of more income trades, paying us back tomorrow. But this is from last month because this is the ones we've got logged in. We bought some American Airlines on September 6th. We bought 800 shares. We paid $13.06. You can see in this column that it's recording how much I pay after commissions. So everybody has to take their cut, right? My broker takes their cut. Then we were able to, a few days later, we got a better price. We sold our American Airlines September 16th $14 calls for 49 cents. And then we just waited. We just waited until September 16th, a few days later. On September 16th, the option expired. We got called out at that $14 price. We wound up walking away with 10.8% double-digit returns. How cool is that? All right. So here comes a. Oh, you know what? I didn't tell you. Some people are saying, wait a second, AJ, you only talked about Ford going up or sideways. What happens if Ford drops? Okay, never fear. If we took that Ford stock, by selling that call option, we already inherently lowered our break-even price to $11.74. In other words, we made a buffer of 40 cents where even if it drops by, we're still in the black. We get a profit buffer by doing this type of trade as well. Now, if it drops below that, I'm going to show you a strategy in just a few moments. And I've got to speed it up here because we only got 45 minutes. But I'm going to show you a strategy that we do parallel that actually removes our risk on return completely. So stay tuned. What does investing by selling premium create? Does it create an instant dividend, a discount on some sort of security like a stock, ETF, index, a profit buffer, an expiring coupon? What do you think? A, B, C, D? There might be more than one answer. I'm seeing the answers come in. It's right. All of these are true when you sell premium. So, okay. Now I'm going to start asking you questions in the future, like questions I haven't covered yet. It's going to get a little more difficult. How can we lower our investment but increase our returns and even convert a margin trade into a cash trade? Should we sell farther out in time options? Maybe we should replace the security, the stock, the index, the ETF, with an option trading at parity? Or should we just give up and buy mutual funds? Or is what I'm talking about not even possible? A, B, C, or D? What do you think? Type it into the Q&A. All right, I'm seeing a couple answers. If you say replace the security with options trading at parity, you're spot on. If you thought it was sell out in time options, I just want to correct you there. The farther out in time you go with the option, the less bang for your buck you get, because the way that premium expires, you're not going to make very much money, and yet you have that holding cost. So we don't want to go farther out in time. Instead, we want to replace our security with an option trading at parity. So you might say, what does that mean? So remember how we like to sell options that have the most premium, and that means selling options that are at the money? Well, when we look for an option trading at parity to substitute for the stock, we want to go deep enough in the money that the option has very little premium. We want it to have all of that in the money or intrinsic value, because now it acts just like the stock, only at a cheaper price. So we're going to use the leverage of the option. And you might say, okay, I can figure that out. Just go deep in the money. But how far out in time should I go? You want to go out as far as you can, because we're going to do this month in and month out. On average, my users are having positions that last 5 or 6 months, right? So you want to go at least 8 months out. That way you won't have this beautiful trade that's building income for you every few weeks, all of a sudden end abruptly because your back month option disappears. And if you're looking for liquidity, we typically gravitate towards these things called leaps. So let's go back to our Ford example. So we could have either paid $12.13 like we did originally for the Ford, or we could go out to the Ford June 2023 $7 call. That thing only costs $5.35, and you'll notice the premium component of its price is less than 5%. Its in the money value is over just about at 96%, right? So that's a great substitute. So here's the example. Instead of buying Ford stock, I buy this back month deep in the money option for $5.35. I still get my 40 cents for selling the near term at the money option. I get that instant dividend. I got the discount on the security, all the same benefits that we saw before, but now on a cheaper symbol. So if Ford closes above $13 on November 18th, we paid $5.35 for the back month option. We're going to get $6, which is the difference between the $7 and the $13 strike price. We're going to get $6 when it gets exercised. That's a 65-cent profit. Plus, we get the 40 cents that we got up front for selling that option for $1.05 total, 21.1% if we're exercised. Now, if Ford is flat, this is the ideal case, because then we get to do it over and over. We sold the back month option for $5.35. I mean, we bought the back month option for $5.35. We sold the premium for 40 cents. We keep that 40 cents. We made 8% ROI, and we're going to do it again and again and again. One transaction a month, right? We're not day trading. We're doing one transaction a month, and we're earning this type of returns. What if it goes down? We still have that 40-cent profit buffer. That back month option would have to drop over 40 cents for us to even be out of the black. But also, right now, I'm going to be telling you the strategy in order to remove the return on risk, the risk on return completely. Let me skip this part. So how can we drastically reduce our risk on return? What should we do? Should we sell half as much option premium? Should we sell out in time options? Should we collar the investment by marrying a protective option? Or is what I'm talking about not even possible? What do you think? The answers are rolling in. We're going to collar the investment. We're going to marry a protective option to this trade. So remember this trade, remember this graph I showed you? That is this trade right here. Oh, I don't have time. I was going to show you this trade we did on Starbucks, where we bought Starbucks back month options, because Starbucks was kind of expensive, and we didn't want to invest more than about $10,000 to $11,000. So we bought Starbucks back month options, sold the premium, got exercised at $40, and 14.9% ROI. Man, you can't get better than that. This drawing here is this trade that we did on ticker PAAS. Now this trade went for 2 years. It just kept going. Started off in August 26th. I want you to just take a look really quick. We bought this stock, we bought the actual stock because there wasn't much liquidity in the back month option. So we bought the stock, 600 shares for $34.73. We sold the premium for $1.76, but then we bought this protective option, in this case, a protective put. Now we spent $4.75 on that protective option. We went out about 3 months so that we wouldn't be affected by time decay. And we put the strike price of that protective option down where we would otherwise be stopped out of the trade. But look what happens. We did both of those trades on September 1st. On September 18th, that premium option expired, meaning we got to keep the $1.76. And then shortly after, it was the next week, we were able to sell that protective option. We didn't need it anymore because the premium had already expired. We got to sell that protective option for a profit. So now this is kind of cool because a lot of people think of protective options as a loss. Like you put them on and if you need them, they bail you out, but otherwise it detracts from the economics of the trade. But notice I made $1.76 selling premium, and then I made $1.15 rolling out the option. So instead of just one source of income every month, I'm now getting 2 sources of income on the month. Plus, when I need it, I've got my protection. In fact, we did it again. The next time we sold our premium for $1.47, bought our protection for $3 and a penny. The premium expired worthless, meaning we got to keep the $1.47, and we rolled out the protective option for $3.62 for an additional profit per share of 61 cents. And we just did that month after month after month. But notice this is keeping track of the break-even price. So our protective options kick in at $34. Look at what happens after the first month. After the first month, we've reduced the cost, the break-even price, to below $34. What does that mean? That means your protective option protects you from $34 and up or below, but your break-even price is now below $31, which means within the first or second month, in this case it was right after the first month, we have a break-even trade, meaning there's no more risk. If the trade goes against you, you still make money. If the trade goes for you, you make more money. And by the time you get to month 5 or 6, nobody cares whether the trade goes against you or for you because the amount of money that you make is it's close to the same. So people are like, what's your win-loss ratio? It doesn't matter. So long as remember, time is my friend. As long as I've had the position for about a month or two, if the trade goes against me, I still win. Do you guys get it? Because we're making money on time passing by, not the directional movement of the stock. Let me see if I can explain it a little bit better, and then I'm going to fast forward. So here's the break-even price. This is the average time our premium selling investments last, about 5 months. If the position is exercised, we'd get 65% ROI. If the position goes against me and gets stopped out, I only get 50%. Either one is pretty fantastic, right? Which would you take, 50% on your money or 65% on your money? By the way, here is where the position becomes risk-free. So I'm not going to ask you these questions. I apologize, but I do want to review the 3 steps, and then I want to show you if you're interested. So these are the 3 steps to do these trades. First, you're either going to buy or short an underlying security. You're going to short the underlying security if you delve into the covered puts, which we didn't get a chance to talk about. Or even better, you can buy a substitute option trading at parity. That's step 1. Step 2, you're going to sell a near-term at-the-money option for its premium value. You're going to create an instant dividend and a profit buffer by doing that. And then you're going to collar this whole thing with a married option that is 3 to 6 months out in expiration to protect your investment. And this is that original chart I showed you. Buy your stock down here. Sell your premium when it's at the top of the channel. Put the protection on. That premium you sold expires at the next option expiration date. And at the next bottom, you sell that option back. And you make 2 sources of income. And you just rinse and repeat, rinse and repeat. Or if you're doing the covered put, the one that we didn't get a chance to talk about, it just, instead of starting at the bottom, it starts at the top. So you either short the stock or buy your put out in the money, deep in the money, far out in time. Sell your premium, buy your call protection. Premium expires worthless. Roll out the protective option. Rinse and repeat, right? So how would you like to never miss a pick, minimize the amount of time you spend away from your loved ones, have support whenever you need it, because that's what it's all about. It's about saving time, creating clarity, and getting the results. And so I'm going to take a couple of moments, in fact, about 3 minutes worth, to tell you about our program. If it's right for you, you might be interested in joining us today. This is for someone who wants to get consistent and reliable results. And I apologize for being rushed, but I want to make sure I give the speaker enough time. So if you take a look, we've got in our program has a web portal like this, and it's got all sorts of stuff, right? It's got video tutorials, it's got webinars, it's got a monthly live class, which is like a lecture series. We've got a whole bunch of screeners that help you find the symbols that you're looking for. We have planning tools, so we give everybody this planning tool where you just fill out a couple of blanks and it gives you the trade plan that you can follow. And every week, there's a lot of people who who love these weekly workshops. We have a workshop where everybody comes together. I usually have about between 50 and 100 of our users on the line. They throw me tickers. We filter them, and in that process, you get to see, what makes a good ticker or not. And then we plan it out all together so that all of us can trade it the next week. So live workshop every Thursday. It's going to be this evening, right? If you're on the East Coast, New York City, it's 9 p.m. If you're on the West Coast, like Los Angeles or Seattle, it's going to be at 6 o'clock p.m. Also, I guarantee that you can send me your trades that you're about to do, and I'll give you a 24-hour turnaround time. I'll get the trades back to you, and I'll tell you whether it's a good trade to do. So what is that all worth to you? What about a double your money back guarantee? So I want you to be with me for 6 months. It's going to take me 6 months to not only teach you, but just keep reviewing your trades for you for a full 6 months. And for you to attend our workshops and do a trade with us once a week, right? If at the end of the 6 months you haven't made money using my program, I'm going to give you back twice what you pay for this program. And I'm going to give you a bonus strategy session with one of my coaches. So add in the double your money back guarantee, your bonus strategy session. What's it all worth to you? Well, the program costs $597, but because Anna is just amazing, and by the way, this is for the full 6 months of access. There's no other charges. I don't put you on any sort of subscription or anything that flat fee, but because she's so amazing, I'm reducing the price by $100. Here's where you go. optionsinvesting.org/Investors-Expo. If you've got a phone, you can just hit that QR code. In fact, this is the page. I just want to make sure what you have to do to get the $100 off. If you have to put that promo 100 disc, click apply. Good. It takes, I just wanted to test it. It takes the $100 off. I'm going to put this ticker symbol or this URL right into the chat box for you. There it is. And I'm going to put the promo code as well. I hope some of you join us for tonight's session. Get a trade going right away. It's all in your chat box if you look there. And I'm just hit my time.
I wanted to I want to say a word about AJ before we start, and I have to, full disclosure, AJ is my friend for about the last 15 years from the first time I met him. But what most people don't know is that I ran one of the largest option firms in the country back in the 1980s, and I know options. If you were confused by anything that AJ just showed you, know that when you keep on, he says rinse and repeat. When you keep you repeat the same procedure a few times, what you're buying, your protection against it, what the net is, what the expiration is, what happened, it all comes together. You know, you only have to do it a few times, and all of a sudden you're going to think you're an expert. So if you were confused, don't let that stop you. The other thing I want to mention is that people don't know this, and I'll probably hear about this from AJ, that he is he's the man on the flying trapeze. The guy is literally professional aerial performer on the trapeze. I went to his wedding, and he and his wife were flying around on the trapeze. I only mention this because anybody who's ever done anything daring like that knows that it's all about safety. That's what you learn. I know I trained in judo for years, and the first 6 months was all about safety. And when I hear AJ talk, I hear the safety part also, and he follows that in his entire life. He knows options. He knows about safety. I know about options, and if you're looking for an options guy, you can't get a better guy than AJ. So if you haven't taken advantage of that, I'm just giving him a plug because, you know, there's so many people around trying to tell you they know options. AJ knows how to protect you from his life experiences and what he does. Anyway, thank you everybody for coming. I know all of these people in the business because I'm the guy that kind of complements all of that, not complements them by complimenting them, but I compliment what they do. Yes, we have something called simple trading plans because people have much too complicated trading plans. But our real love around here and our real direction and passion is about helping traders be the best peak performing traders that they can be. And the best way to do that is to understand how you can do that by staying away from 5 poison pills that I'm going to show you. This particular presentation comes from the fact that I've been trading actually a lot recently myself. I go back and forth with minimizing my own trading and and maximizing the development of my business and back and forth. Look, I'm a trader. I have to trade. And so, and I love it. And I think when you get profitable in your trading, I think you're gonna love it too if you're not already profitable. So to be all that you can be, you got to handle the mental and emotional part. And as I'm trading, I still get thoughts in my head that I've learned to put aside because they're a poison pill. And as I was coming up with them recently, I said, let me make a presentation out of this because I know traders are going through this. I know it from my own experience. I know it from coaching traders and helping them and getting the feedback about how they think and why they chase trades and why they revenge trade. They're taking some of these poison pills, and I'm gonna just get into it. First, this is me about 5 years ago, and that was my wife about 5 years ago. We're still together. We've been together over 40 years. And Tisha really is the heartbeat of what we do as far as our the tools that we give traders to be disciplined traders, to follow the trading plan without being their own worst enemy. Tisha, the processes that I'll touch on at the very end of our conversation today, were all developed by Tisha, and she's world famous for what she does. I'm the trader, Tisha's the mind trainer, and together we're the disciplined traders. But I only had disciplined trader as a URL, so we kept that, didn't put the S on. Anyway, this is a little bit about me. I'm an author, trader, consultant, educator. I've written several books. My early career was all about trading plans. I mentioned that I ran a very large option firm. And what I realized about the 60 traders that were in my particular office and brokers that were in my office, they were trading other people's money. And I noticed that, it was my job to make sure that they did the job correctly and made their clients money and were consistent in relating what was going on with their clients. And what I noticed is that those traders with the simple trading plans, the simpler, the better. They were the ones on the top of the leaderboard. They were the ones that were trading much more effectively and making more money for their clients. You've got to keep simple, okay? And that was where this book is still available online, several sources. I think Amazon, of course, is one of them. This is another book that I wrote that really is just a inspirational quotes from the 4-minute drills that I've done. I have other, I think all of these three are still on Amazon. The More Profits thing is just a video of me performing it on stage for one of the expos, the trading expo. And the last picture there is just me doing one of my 4-minute drills. Started those back in 2011, 2012. It really put me on the map. One of the guys who worked for me, he said, why don't we take some of the snippets from what you do and make it a book? And that's what the inspirational quotes are, kind of quotes. It's more of a coffee table book. Anyway, that's about me. I'm again, the last 20 years, Tisha and I have focused on helping you be all that you can be as a trader. We treat our traders like athletes. And so that's what I want you to see yourselves as, okay? Because athletes train. I've worked for Payne Weber, so I have worked for the big companies before. I've had my own commodity trading. I was a CTA, commodity trading advisor, where I ran millions for people with a lot of money that had minimum $250,000 accounts. And but you think trading for yourself is stressful, try trading for others. And it was a good business. I was making 20% of what I earned, of the profit that I earned. But it was a little, I thought for all that stress, I might as well just do it for myself. And that's what I wound up doing. Disciplined trader, again, the last 20 years, focusing on the mental and emotional capabilities of traders. Again, my wife recognizes as an innovator in the field of subconscious trading. Won't read it all to you. Her titles are massive. Let's get into the presentation. Chasing the Dream is the first tablet that I see a lot of traders taking. When we go on a Zoom call on our coaching, whether it's our Excel program or our one-on-one laser coaching, I come across traders who talk about living the dream and getting caught in the situation where when you put on a trade, the trade goes very well at first, and you believe, boy, this could be the big one. This could be the trade that can take me to the promised land, or make my month, or make my week, whatever it is. You get off to a big start, and this could be the big one. What winds up happening most of the time is that it's not the big one, and that the market comes back, and you either take a very small profit or sometimes break even, sometimes back to a loss, living this dream, making yourself right for the idea in the beginning. You got to have a better approach, a more strategic approach. Most traders that are professionals set a target. They look around the chart. They look for support and resistance, and they look to see a market run to that support in a long trade, or run to the resistance in a short trade, and they look to take some of all of their profit at that point. If they have multiple positions, they'll take the vast majority at that level, and maybe they'll leave one for the big dream. Okay, so and that's okay, but to put on a trade and have it go your way, and then allow that thought that this could be the big one to stop you from the process and the plan that you had when you first took the trade, not good. I mean, at least you need to have a trailing stop in a trade that you believe is your dream. And I don't mean the trailing stop being something really deep. If you've got a nice profit, you really should be preserving that. And one of the easiest ways is to look back 2 candles and put in a stop under the low of that second back candle, and that will usually protect you in a way that doesn't give up too much, but allows you to see a trade expand. So chasing the dream, you really have to watch that idea. The second pill that traders tend to swallow is thinking that you need to learn more, that you don't know enough to win. That loss that you just take, or that bad day or week, means that you don't know enough and that you need to learn more. I got to tell you that the problem is that you probably are thinking too much and you've learned too much. Look, there's nothing wrong with learning, and there's nothing wrong with learning a lot. But when you are trading, you've got your trading plan set, and you need to run that trading plan the way that it is. Simple beats complicated. You need to simplify your strategy, test that simple form, and you're going to wind up seeing that it works even better than the more complicated version of what you have. And this is from it's from my own experience, but then feedback from other traders that I've literally forced to do this, where I've made them accountable to take their trading plan and simplify it. Be surprised at how simplicity takes the clouds away, makes getting into trades easier, makes taking your profit easier, makes everything easier. Simple is easier to test also. So the more simple you are, the more straightforward your trading is going to be, the easier it's going to be tested. And literally, there's thousands of approaches that are going to work well. So simplify what you've got. Honor yourself from having gotten where you are. You don't need to learn more. It's usually the first thing I have to tell most traders. They think, well, if I just learn a little, no, opposite. You know enough, especially now. Of course, if you just started trading 5 days ago, you haven't learned enough. But if you've been trading for a year or 2 years or 5 years, you know enough. You know enough. You've already been drawn to the kind of trading that you like. You've already been, maybe it hasn't worked for you, so you learn to hate it. But being drawn, you've already probably have a trading plan that will work if you just simplify it, or enough on that. You know enough. You don't need to learn more. Simplify what you have. All right. The third pill is changing your plan while trading. One of the worst things you can do. This is a pill that when you swallow it, not a good thing. Changing your plan, and really it should only be a tweak if you've tested a plan and it's working well, and all of a sudden for a day or a week it doesn't seem to be working. It doesn't mean the plan is bad. It means that maybe the market just didn't cooperate for you that particular week. It's not a time to throw everything throw out the baby with the bathwater, as they say. You've got to adjust your plan when you're not trading. When you're trading, you have a plan and you have to follow that plan. You can't be changing your plan in the middle of trading. It's one of the worst things that you can do. Then you're flying on your own. You're flying without a plan. And you do that after 2 or 3 losses and you're way out of bounds. Okay? Stop trading and look back at your plan and test it again and get that confidence in your plan again. I think you're going to see that either you didn't follow your plan the way you should have in that core week, or maybe it's just a couple of days, it was an even day and that got you down. Whatever it is, generally, well, all the time, you want to change your plan, any tweaks that you make when you're not trading, okay? Because when you decide to trade, you have to already have decided, I have a plan for the day, I'm going to follow it. And I'm going to follow it, not because I feel good about it, because I tested it, and I really feel strongly that it'll work if I follow it. Okay, changing your plan while trading. Don't swallow that pill. All right, reaching for that extra tick. Now, I'm going to sound like I'm going against maybe some of what I said about reaching it, taking a target and going for that target and taking it. Sometimes when you're approaching that target, it stalls. The market stalls, and you have 80 or 90% of what you wanted from the trade in the bag if you take it, but you're hanging out for that extra tick or two. I find that if you start to have some sideways movement and you're very close to your target, I'll even say 70, 80% to your target, take it. Take the profit, okay? It doesn't mean you didn't reach your target. It doesn't mean you didn't change your trading plan. It needs to be part of your trading plan. If the market stalls for 2 or 3 candles while it's going for my target, I take the trade and move on. One of the things that it does, and I like to talk about this in depth in other conversations, but one of the things that it does is to allow you more time for another opportunity. If you take 70 or 80% of the opportunity that you created and took advantage of and about to take advantage of because you took the profit, then you can move on to another opportunity. But standing there and begging for that extra few ticks, it's not only going to sometimes, I mean, when it starts going sideways, you wind up to probably have a 50-50 deal if you look around, probably doing it against some kind of a support or resistance. So the idea is, listen, if you're close, take it and move on to the next opportunity, because the more opportunities you can set yourself up to take, the more profit you'll make, because you're trading a trading plan that you know will work over time. And the more trades you take, the better off it's going to be. So take 70, 80% when the market stalls, okay? And take it, move on to the next trade. So don't be the trader who reaches for that extra tick and just lets that market dissipate and wind up being an even trade. It's kind of an ugly picture, but I wanted to make a point. All right, the 5th and the largest kill that you don't want to take is the telling yourself that you're going to change in a conscious fashion. That little voice on your shoulder is, excuse me, just had to take a drink there, is telling you, well, wait for the target. You want to get the whole thing. You want whatever that little voice is that's telling you, or it's hey, I just lost the last couple of trades. Maybe I should kind of wait and see if this trade goes through instead of pulling the trigger the way I know. That if you start to follow those suggestions, okay, it means that you're being controlled. It's not going to change, because you're going to talk yourself into that situation, because that is what your subconscious mind believes is true for you. In other words, your subconscious mind is I'm going to explain this a little bit more in a second, but that little voice, if you keep making the same mistake over and over, revenge trading, for instance, has been a big thing in 2022. Don't know exactly why. Maybe it's all the anger on the news and whatever it is, but everybody is, a lot of traders are succumbing to revenge trading, where they had a trade, they should have taken it, and they didn't take it. The market went. They're kind of revenging, whether it's to the market or to themselves. They want to get that back, so it's not. So they're not the jerk who didn't take that trade. Whatever the ego is making you do, that little voice is having you do things that you shouldn't be doing, and that's because you've programmed fear into your subconscious mind to tell you to think that you can read a book, and there's some great books out there. To think that you can read a book and change, you're only fooling yourself. I'm sure you can look up on your shelf and see all the books that were supposed to have changed you, and they haven't. Because to make a change, you have to change what's going on in your subconscious mind, and that's what we at the Discipline Trader is all about. Changing your beliefs on a subconscious basis will prevent you from not only misunderstanding that you listen to yourself consciously and reading books are going to do anything for you, but it will also eliminate all of the pills that other traders are taking, or that you may find yourself taking, because now your subconscious mind is of the belief and of the strength to do the things that serve you as a trader and not take away from the trader. When you look at the subconscious mind, what's happening is that it's like the bottom, it's like what's underneath it's a pretty good picture of what it's about, although I don't think this is 90%. Maybe it is if you go for the mass, but 90% of your mind is really involved in your subconscious mind. That little voice on your shoulders in the conscious mind is only what your subconscious mind believes is true for you, is communicating to your conscious mind. So if you are hesitating to take a trade, if you are revenge trading, okay, if you can't pull the trigger, you keep hesitating, it's because you have created neural nets in your subconscious mind that are now controlling your actions, that are now feeding little suggestions to your conscious mind, and therefore having you do the things that are wrong because you've programmed the wrong things into your subconscious mind. And we're all about helping you program in a very simple way, 7 minutes a day, to your conscious mind, to your subconscious mind, so that you can now operate in the right way. Let me give you an example. This right here is actually a micro. What is a mic? What is that? What is that microscope called? I don't know why it escapes me, but this is a picture of really the subconscious mind in action. What you're seeing here are tendrils. These are actual thought energy. These are thoughts like, oh my gosh, I just lost a trade, I better be careful. Or, oh my gosh, is this whole trading thing for me? I can't seem to get out of the struggle. Or I can't, all of these are energy patterns. And this is thought energy. Thoughts are energy. It's already been proven. This is why Think and Grow Rich, Napoleon Hill said, what you think is what you get. In that way, it's very, very true. He didn't know exactly how it was happening scientifically, but we've now figured it out. These are energy patterns. If you have enough of them that have the same message, that have the same quantitative message, it will form a neural net. That is what this is. This is the neural net that you may be operating on when you hesitate to pull the trigger on taking a trade. You know you should be pulling the trigger, but you can't get yourself to do it. Why? Because you've fed your mind resistant thoughts. You've fed your mind, I'm not sure this is for me. I just lost on the trade. I'm thinking, why does this keep happening to me? Or maybe it's a result of a trauma that keeps on making a thought come up, a blown out account, whatever. You keep bringing those thoughts back, and it winds up your subconscious mind. You've got to tell it what to do, and then it's going to protect you. This now is true for you. You've given your subconscious mind enough input to realize that what you want is to be careful before you take a trade, to make sure that you do, because this may not be for you, but you want to make sure. I know you want to do it, but you want to make sure. This is what this neural net is doing. Okay, it is doing what you've asked it to do. So in order to turn that around, you need to create a more dominant neural net with opposing thoughts. And when that happens, when you create the new neural net and continue to reinforce that neural net, it will this neural net will start to fade. It will start to atrophy, and it will disappear. Okay, and then when a trade happens, you'll be able to take it with assurance. All you have to do is take a few deep breaths and take in thoughts. And in our training, these meditations that we do, it's just my wife Tisha giving you the thoughts. I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. I understand that my tested, proven process of trading will get me where I want to go into profitability. I trust my trading plan. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. When my system gives me the impetus, the signal to get into a trade, it gives me the signal. I take it without hesitation. I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. I kind of butchered a little bit, but what I think you get my point. If you tell your subconscious mind, because when you take those deep breaths and relax, you're dropping into an alpha brainwave state, and alpha beta brainwave state. That is the brainwave state by which the strength of your thought patterns are at its greatest, and that's where you form your new neural net. All you have to do is take a 7 or 8 minute meditation before you start trading for 5 days, 7 days, 10 days, 2 weeks. That's it. One time before you start trading for a week or 2 weeks, depending on how big this neural net is that you're opposing. Okay, even the hardest heads, 10 days will be enough. All of a sudden, you'll see yourself, when you get the stimulus to take a trade, boom, you'll take the trade. That's all it takes. I know it sounds too simple. But you have to get yourself to do it. Okay, that's it. You know, you have to put your ego aside and say, hey, I need to change. You know how you're being controlled by how you're responding to how your trading plan tells you to do, and you're doing something other than that. So let's take a look at our peak performance assets, and from these assets you can learn some of the things that you need to do. The Disciplined Trader Mastery Program has 6 core subconscious training meditations. These are the 6 things that we've identified with traders over the 20 years we've been doing it with traders that come to the forefront, and they are hesitation to pull the trigger, and that can become confidence to pull the trigger. Okay, overcoming thoughts of fear and greed. Last year, this was the big one, fear. When all the volatility was newer, and in 2020, same thing, the volatility was new, the kind of volatility when COVID was happening, scared traders, literally made them fearful. And those that had big trades from it, they turned that greed into a problem, because they were much too aggressive, wanting to recapture that lucky trade or that one trade that made them all that money because of volatility. Volatility can elicit fear. Greed is worse than fear. You've got to bring that cortisol level down, and we can do that by helping you create the right neural nets. Okay, trade to make money mindset. This is something that traders, if you can frame your trading as a business, and that already makes it more, that already puts you on the path to A follows B, B follows C, puts you on I mean, every good business has a plan, a business plan. Your trading plan is your business plan, and you're here to make money. But I even go further than that. I like to see you, when you have a losing trade, I like to see you frame that as, hey, if it was a business, I just put an ad in a newspaper, I just put an ad online, and it didn't bring me any clients back, didn't bring any prospects back. I just kind of threw that money away, but I didn't throw it away because now I know what not to do as far as advertising. Okay, same thing with trading. Okay, you have a poor trade, you lost money. Hey, that's the cost of doing business. You're in business as a trader. You have to frame. It's much more comfortable for you to trade. You've got to be serious. It's not a hobby. It's not something that you're trying. It's a business, and you're part-time business, full-time business, whatever it is, 10-minute business a day. But when you're in that business, you're in a make your money mindset. I think you're going to wind up seeing that this is a very helpful thing to do and keep you on your trading plan. Strength to take your losses. That's, of course, something that is a very individual thing, but it affects most traders at some point. If it doesn't affect them for their entire career without having approached it and reversed that. And understanding that taking your losses gives you the opportunity to go to the next opportunity. Okay, I like to quickly, if it's going to, I want to know now if I'm going to be in a losing trade. Tell me now so that I can go on to the next trade. I'm not aggressive in wanting to take my loss, but I allow my loss to be taken because I know it's part of the whole. Without the losses, they're not going to be the wins, because you're going to not be running your trading plan if you don't keep taking your trades as your trading plan tells you. You have to have strength to take your losses. And we have a couple meditations really good for that. Exercising patience. Surprisingly to some, this is where we get most of our testimonials. I'd say about 40% of our testimonials are about how traders have reversed their lack of patience and now are patient to wait for the setup. They're waiting for the trading, for the moving averages to cross, instead of saying to themselves, "Hey, if I take the trade now, I'm going to have less of a risk and more of a gain. Why should I wait till the market goes even further and those lines? I can do it now. Look, it's obviously going to cross." And of course, obviously, doesn't always happen. That's one of the biggest mistakes you can make. Of course, patience to wait for your trades to develop and so on. Being a patient trader is really a talent that you're going to see works through all of these other situations. Okay, exercising patience, a great neural net to have. I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. I love the fact that I'm a patient trader. I understand that allowing a trade to develop works in my favor. I've tested it over time because that's what a wise and disciplined trader does. I'm confident in my trading plan. I'm a patient trader. I'm a wise and disciplined. You put those kinds of things in your head, you will build neural pathways that will support you in your trading rather than work against you. And the last thing is what we call sustaining discipline. We advise that traders take this short 7 or 8 minute meditation before they start trading so that they can get focused in their trading after they've put aside all of these other situations. Okay, because sustaining discipline is really a potpourri session. It's only an 8 or 9 minute session, but what it does is it kind of mentions all of these things to keep the plate spinning on the pole. I don't know if you've ever watched the Gary Moore show and saw the guy with the plates spinning, and you take 10 plates and spin, and by the time he gets spinning this 10th plate, the first one would start wobbling and have to run back. You know, there are thoughts going, we're getting fed a lot of negative thoughts by CNBC, by CNN, by Fox, by everybody. They're filling our heads with crap. And so in order to, this is the one that maintains you through the rest of, we have traders that have been with us, have taken these meditation videos. This is the one that they take now that they've corrected the negative situations in a positive. This way, it keeps all of the neural pathways and neural nets that you've created refreshed by continuing to just throw another neural net in there, a neural pathway in there, another couple of them to feed and continue to strengthen that neural net. Okay, so I hope I've described these core situations because they're very important. Okay, I'm also going to give you 208 of my 4-minute drill for traders. It's something that I'd like to give you with the Disciplined Trader Mastery Program. Now they're all online, someplace you can find them but it's really nice to kind of I just clipped out a little bit of it here for you, but there's several pages, of course. There's probably 15 or 20 pages where you could just scan some of these titles: managing the windfall profit, trade position correlation. Are you being realistic about risk? Whatever draws you. I like to, when I suggest how people should use this, I say don't go hunting through a bit. You'll be drawn to the right one. I really believe that. Just pick one of the pages and close your eyes and point to it. They're only 4 minutes long, but I go right between the eyes, A to Z, with what capital preservation main points are. Okay, I go through psychological impact of losing money, what it really means. I pull out the hurt and then I pull out the joy of it. These are 4-minute drills that really made me the guy. I guess I can't say it any other way. When it comes, if the industry needs somebody to help a trader with the mental and emotional issues, they always refer them to me. I don't care if it's AJ, I don't care if it's, everybody in the industry knows who I am and what we're capable of doing. And I really enjoyed making 208 of these. I stopped a few years ago, but they're all here for you to motivate you midstream, middle of the day, whatever it is, after lunch. A lot of guys use it after lunch, gals use it after lunch. It kind of motivates them. So you're going to get all 208 of them. I also included a basic series of building and running your trading plan. These are for people who are new. You know, not everybody that crosses our path. And it's, you know, they ask me, well, should I do the mental stuff before I learn how to do it at the same time? And I've noticed that a lot of traders who come to me, and we're making them disciplined traders, and they got lousy trading plans without risk and money management techniques that are viable. And so they wonder why they're losing even though they're disciplined. So I put in these are hour-long presentations on building and running your trading plan, employing risk management, journaling techniques, and again, more of trading as a business. There are all kinds of bonuses that I'm not going to be describing in the Disciplined Trader Mastery Pro. The basic thing I hear is when you take advantage of what I'm going to offer, the first thing that he didn't say anything about all this. He didn't say this was on here. You're going to see a lot of stuff. I'm just talking about some of the things I really want you to know about so that I want you to try this. Okay, I want you to try to be the trader that you know you can be. Okay, so these are the basic series. You may or may not need them. It's always good to refresh. And then I'm going to give you 101 life-changing meditations. Now, I mentioned to you that Tish and I have been working together on helping people for over 30 years. The first 10 years, we were helping golfers, tennis players, students. Tisha was on a board in California, helping students of all ages to have a better memory, so on and so forth. Traders have asked us too many times, this has worked so well for traders. Do you have any meditations for other parts of your life? Hey, we had all these softwares that are no longer in existence, but except for SalesMind, we still sell. And all of these things, we have 101 different life-changing meditations for you. So you can avail yourself of all of those, okay? And the information in the program is unbelievably valuable. Keep up the great work. You're helping many fledgling traders like myself to improve and be consistently successful. This is from Craig, who's out in Lincoln, Nebraska. He wrote this several years ago, but I wanted to show you to it in the capsule. We've got, I can show you the hundreds, I think there are 1,000 testimonials now, but look at, we've been doing this for years and years. Okay, if you're getting in your own way as a trader, take advantage of this. I'm not going to go through all of this. I just wanted to show you that they exist. Here's our 30-day risk money management guarantee. If you're not experiencing a real positive change in your mental and emotional approach to your trading, we'll refund your investment, no question asked. Okay, you'll feel the difference in 30 days. Okay, and I'm going to give you a fast action bonus. If you act before 3 o'clock today, okay, I'm going to give you our 3 original simple trading plans: big move potential, the continuation plan, and the extremes plan. These are 3 different trading plans that I was giving to traders who didn't have trading plans. I want to give them to you. And these are only for the people who jump on this right away by 3 o'clock today when this event is over, okay? So the Disciplined Trader Mastery Program, you're going to get, it's the core subconscious trainings that I mentioned to you. You're going to get the 208 drills, 4-minute drills, the basic series, okay, the lifestyle meditations. It's a total value of $3,931, okay? I'm going to give you 90% off. For you, it's going to be $397. All you have to do is go to the disciplinedtrader.com/mastery, okay? disciplinedtrader.com/mastery, and you'll see it. I've already discounted it for you, $397. And don't forget the fast action bonus. I'm going to give you the 3 simple trading plans. Each trading plan fits on one piece of paper. When to get in, when to get out, what the triggers look like. I want to make sure that everybody out there that's listening to this presentation is a disciplined trader, and don't swallow the pills. Don't get in your own way when you're trading. I've made a price so that you can try this under the umbrella of the safety umbrella of my guarantee. So stick around. We got another great presentation coming, but I wanted to make sure that you had this in your arsenal. Start training your mind, and you're going to see the difference between your results. You'll be able to actually run your trading plan without getting in your own way. Thank you, Anna, for having me. And thanks for having such a great person before me and after me. Makes me look good.
Thank you.
Folks, I'm sure you've had a blast thus far today. Let me try not to make this terrible, and I'll silence devices. How about that? Give me just 1 second, folks. I don't want that to be a distraction or annoyance to anyone, of course. Okay, there we go. Yeah, so I'm sure that you've had a lot of fun thus far. Some amazing presenters. Hopefully, I can bring a little something to the table that will, maybe help us. What I was thinking to do today was I'm going to get through this short-ish PowerPoint, and then we can jump out to the charts, because it's always good, of course, to put it into action. And then we can just basically kind of recap what we discussed in our live room this morning, walk through the trade setups that the zone suite produced for us based on our supply and demand analysis. So, we're going to talk today about the automatic supply and demand zones, but it's very important that we, when we use words like automatic, right? I always try to preface that with a little bit of clarity. So yes, they're automatic. All the information is derived for us, of course, and then populated on the chart, et cetera. But I just always am very careful with the terms automated and automatic, because I don't want anything to be misconstrued. I am a proponent, or rather an advocate of not manual. I don't mean it to say so much manual. I need the information on my chart, of course, but I do try, when I'm having discussions with folks, I try to always take them away from the automated route in the beginning, and then something that we can, that is, of course, we can move into. So we'll talk about that a little bit as we go, but let's get through, let's go and at least get started. I need to read through this disclaimer really quick. Just for clarity purposes, trading, of course, contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All software provided or purchased is strictly for educational purpose only, as well as this presentation being for educational purposes only. Okay, so we can just kind of go through that, and the opinions, of course, are those of the presenter. So we'll go ahead and kind of scurry through this a little bit. I'm sure, I know that we've done events, here before. We've always enjoyed it very much. We love working with you guys for sure. And that being said, I'm sure many of you are familiar with our company. If not, that's perfectly fine. We'll give you a little bit of an introduction. Pure Financial, the acronym there is PFA, of course. We're an online trading education community dedicated to supply and demand concepts, order flow methods, if you will, right? So I also don't want to get that misconstrued. A lot of times when you think of order flow, you might be thinking of footprint charts or something like that. Absolutely not. We're just trying to predetermine where the abundance of order flow will take place, of course, before it does. So we provided training material and software to individuals looking to learn about trading since about 2009. We believe in the power of having others on the same path as yourself, which is there to support you. And that goes for us as well, right? We love having a team, so we try to keep the camaraderie. Our mission is to provide a positive and effective environment for traders and investors who wish to utilize supply-demand trading methods and concepts and share their experiences as a team. Okay, so that's us. That's PFA, guys and gals. Again, I like to think of it as a community, but to be clear, there's the community, which is a lot of education, and we basically share our trading methodology, things to that extent. And then there's also the software development. And in the community, they're both inclusive, but in the we also separate out the software as well, because there's a lot of people who have had significant training and they really don't need ours. So we also offer that as well. We'll talk about that a little bit later, but I certainly don't want to spend too much time on a sales pitch, right? So today, excuse me, we're going to go ahead and get started. And the first thing we want to look at is the PFA Zone Suite, which is a tool to remove supply and demand subjectivity. And I shouldn't even say that. I mean, I should just generally say it to remove subjectivity, because there's so many bells and whistles built into it, which we'll look at here in just a moment. So it is NinjaTrader 8 compatible. It's designed to reduce that subjectivity we were talking about in determining high probability future turning points on a price chart. It utilizes price recognition, volume distribution, and market volatility in its calculations, among many others, of course, which are then displayed on the chart with custom graphics. They can be used for enhanced confluence purposes and for keeping track of historical data, which is fully back testable. So, to be clear, when we are looking, I just want to offer some clarity around the term probability and future turning points, right? So we're by no means saying that we can predict future turning points. Again, I've never known anyone that can truly predict anything. What we're looking for is, just to increase our odds, right? Increase our chances, if you will, and being able to predetermine that. So, okay, so let's continue forward. First, we're going to look at, this is the Zone Suite. This is a chart, if you will, of, well, I don't remember what it is, to be honest with you, probably the S&P futures contract. But this is NinjaTrader, the platform. So this chart's coming directly from NinjaTrader. As we previously stated, our software is fully compatible with NinjaTrader 8. Okay, so that's what you're seeing here, except, so you'll notate down here in the bottom right, NinjaTrader logo, right? Everything you see, however, inside of the chart, including the menu items, let me do this really quick. Let's see here. I just want to make sure that you are all capable of seeing. Yeah, there we go. Okay, so right up here, these are also part of the PFA Zone Suite. It is inside of the chart in and of itself. Okay. So that we have a multitude of data points. First and foremost, we have our primary levels, and then we also have our secondary levels. So the difference there, you can think of those however you like, but essentially you have the capability of putting multiple levels on a chart simultaneously, right? So let me give an example there. I am maybe a swing trader, okay? And I want to utilize daily supply and demand in combination with hourly supply and demand. So that's pretty common, I would say, right? I mean, that's pretty common paired time frame, certainly is for us. That being said, actually, let me step back for a moment. That's one of the trades I'll show you today, by the way. We really had two that were, for training purposes in our room. We had two. One was on the 60-minute chart, and then we took the other one, and that was on a 3-minute chart. So we try to do that, but we're also very straightforward about the fact that we are not, huge advocates of the very small time frames. A lot of work, takes a lot of work and a lot of screen time, right? All right, so here again, let's stay focused. Primary levels and secondary levels. We can take any time frame. It doesn't even have to be time-based. Could be volume, could be like volume zones, could be tick data, Ranko, etc. So it can be any type of zone, but we can overlay two on the corresponding chart. Now, in addition to that, let's say that we have the chart set to a 60-minute, or actually, you know what? Let me go a little bit further. Let's say we have the chart set to a 15-minute time frame. We can still put two different time frames on that chart, right? So really, we're then intaking 3 different time frame worth of data. So for example, I can put, let's just pretend for a moment, right? Let's say this is a 15-minute chart. This big yellow zone down here, which is our secondary, let's, for all intents and purposes, pretend that that's a daily zone, right? So those will be across the chart and so on. And then let's pretend that the green zones are 60-minute zones. But remember, I said we're on a 15-minute chart, okay? So it's important to understand that we don't have to use what's on the chart per se, but we certainly could if we wanted to. All right, so that's our primary and secondary levels, and we can, of course, use those on anything we have data for within the NinjaTrader platform. The next thing I want to look at is our altitude grid. Think of this as perceived value, a very basic concept: buy low, sell high, right? And I mean, we kind of, oh boy, the members would give me a hard time, I imagine. but I like to joke around and have a good time. I don't think it's worthwhile to be overly serious, but at the same time, sometimes we kind of have to drill down on things. Today we really address the whole buy low, sell high concept. If we think about that, and I'll talk more about this as we get out to the actual charts, that makes more sense. But just for anyone who's paying attention right now, if we think about things from a just a very, very basic point of view, we could say, look, the S&P for all intents, or the Dow, even worse, right? So we could say the Dow is down, roughly 35%. I think it was over 35% at one point. The S&P over 25%. So if we literally didn't have anything in front of us, no chart, no information, just maybe we're watching CNBC or whatever news outlet you listen to, and they come on and they say, oh, the Dow Jones Industrial it's down 30. Let's just call it 30 even. Okay, so maybe it rallies back up, bounces around 30+%, and that's all we know. So then a buy low, sell high concept, it does help me, at least. I can't speak for everyone, but it helps me to just stay the course, right? Absolutely stay the course, because it's the exact same thing when I get an email from Best Buy that says, hey, 30% off next 48 hours. I think I got one the other day from somewhere, and I was like, oh, there we go. I'm going to go grab whatever it was that I wanted. I mean, look at Amazon Prime Day, right? But that's how we function, and human nature, right? So then when we look at the markets, we get very conflicted because we're in a downtrend, prices dropping, so on and so forth. So like I said, we just kind of hammered down on that today, because this is an extreme, in our opinion, and nothing more. But the way that I'm viewing the market is we are getting an extreme discount. I'm not trying to predict when that's over, when the downside of the market is over. But what I do know is that I am absolutely not eager to jump out and sell this market, right? When everyone else is looking to do that, I pretty much want to start thinking about the opposite. So anyway, like I said, we'll touch a little bit more on that. But that's the altitude grid. It helps me to see that. It's the perceived value of the market. Buy low, sell high. So if you notice down here, you're going to get a green color. Kind of obvious reasons, right? Green and red and so on. So as you go up in the perceived value, the colors change. So your lower quadrant will be like a lime green of sorts. This will be a dark green. Here you have like an orange, and then followed by the upper quadrant, which would become red. So just kind of a warning signal, if you will. Another thing that we have, and I will say this is what we're using more, at least as of, we've always used them, but we're really focusing in our live room with these because we find that they're much easier for especially individuals who are starting out with our methodology and things to that extent. This is more of a means of executing in accordance with what's happening, right? As opposed to, let's say, retests of supply and demand levels. You can get a little bit tricky there because emotions tend to run rampant, right? So if we're trying to predetermine where the market is going to turn, i.e. supply and demand levels, and retesting them, it tends to push on the emotional button a little bit more. The continuations, however, it's as price is currently moving, right? Now, to be very clear, we are very against breakout trades in the standard and or conventional method. So I don't want you to think we're using these as breakout trades like you would normally think of. We're absolutely not. In fact, I think that has probably hurt more than anything. Okay, so I would never want to do that, but there's very specific locations, and these can be used at turning points, right? So instead of saying, hey, I'm trying to predetermine that turning point, we have what we call the continuation patterns built into our software that confirms that information for us. And then we have literal push button. We're going to get to that in just a moment. So we have automatic trend lines, okay? To be transparent about it, this is probably one of the items that we use the least, just because, drawing a trend line, we just do it so much, we just kind of put it on the chart. And quite frankly, this was, you would think it'd be easy, but this was one of probably the most difficult things to code into software, just because, nothing's perfect in the financial markets, and you've made from time to time throw a little discretion in there or something to that extent. But but they're absolutely built in. The reason that we built them in is for automation purposes. Again, I'm going to be, careful with that phrase, but we do indeed have it automated, and we needed that for automation purposes. Okay. All right. The next thing I'll look at is a volume profile. So I think you're probably fairly familiar with this. We've had it for, I can't even recall how long now, many, many years, but we did, of course, long ago build it into the zones. So think about it this way, the zones in themselves, that's what's really helping us to mitigate risk, right? It's offering some specificity, if you will, for, as we were talking about the turning points, things to that extent. But we decided, look, couldn't we amplify that, right? Could we make it even more precise? So we built in the order flow, the volume profile, if you will, inside of the zone. So not only do we have specificity of the area of it in itself, we can get even more granular and go inside of that area and say, okay, this is, to be more specific, this is where we believe price will most likely turn. So that not only is that built into the zones, of course, we have the tool. I believe actually nowadays NinjaTrader has created one themselves as well. So I forget what they call it, but suffice to say, you can draw a rectangle anywhere on the chart over, any period, doesn't matter. And you're basically going to get that order flow data, volume profile. Of course, ours has some built-in, bells and whistles, nothing too crazy, point of controls, value areas, but there's little button clicks and things like that. So I don't want to spend too much time on that. But if you have any questions, please do let me know. Okay, we also have market structure. This was also one of the more difficult things to code in because, one would think maybe a zigzag indicator, and that is built into NinjaTrader. This is not a zigzag indicator. So there are very specific criteria, or is specific criteria that we require in order to define structure. We also needed this for automation purposes. All right, so let's look specifically at the first thing that I mentioned was the primary and secondary zones, right? So we can see here we have a supply high and a supply low. Furthermore, we can see that we have a supply high and another supply low, right? So we're seeing basically a zone inside of a zone. So let's use that same example from before. We have a 60-minute supply level inside of a daily supply level. So this is what helps us to increase the chances, if you will, of price actually turning. And then, so I think you might be seeing a pattern already. So it's starting to emerge because if you think about it, we're talking now even more about specificity, right? So we're taking a larger zone, then we're putting a smaller zone inside of that larger zone. And then if we wanted to go even more granular than that, we can turn on our volume profile and attempt to even specify inside of the smaller zone where price is likely to turn. So again, that's the pattern in which I was referring to. You can start to see that emerge. We're all about efficiency and specificity, yes? So there we just put a little entry signal on the chart. You can see where price touches the, again, this is an example, the 60-minute zone inside of the daily zone, and that's where we would expect price to turn. In this particular case, it clearly did. All right. The next thing I will talk about are those continuation data points. Please remember what I mentioned before. We are using these exponentially, right? However, we do not use them outside of very specific locations. So it's not like every single one you see here is going to be valid or even of any use whatsoever to us. But if we're in the right location, literally we can touch a button and it's going to do the work for us, right? We're simply waiting for that little line to display, and they're very specific. They can invalidate themselves and so on. But we can simply hit a button and just sit back and wait. All right, so you can see on the left, actually I should back up. You can see there we call this one a DVD, right? Okay, but basically what that is where price is dropped, it consolidates, and then it's dropping again. So think of that as supply or more sellers than buyers. The next one we're looking at is the RBR. So these are pretty common acronyms out there, right? I think you can probably do a little Google searching and find those. But this is a bullish continuation pattern. It's where price rallies, consolidates, and then continues a rally. All right, so just what you're going to see here is I'm going to put several entry markers on the chart as if we were going to enter based on the RBRs and DBDs continuation patterns. Okay, so notice, I'm going to use my arrow again. where the red in this case, so we're looking at supply here. Basically what happens is as price comes down and hits this line, there's already an order there, right? So if I were to go out into the software right now, and as a matter of fact, I can in just a moment if we get to the charts, because we have one as we speak. So I could go out and submit an order in the event that that line does appear. Now, it doesn't have to be there at the current time, but that's basically saying if, then else, right? So if this signal presents itself, execute an order in accordance with it, right? So for all intents and purposes here, push out a sell order if this line displays. When it does, it executes the sell order, and then if we touch that, so it intuitively knows it should be a stop order of sorts, right? If we touch that, however, now I'm into the position. So that's the same. Those are the two trades that we took today. I'll be happy to show those to you. And I'm just going to scurry through this, right? Because all you're going to see is just a bunch of other lines. Okay. All right. So the next thing that I want to touch on briefly is our order management data points. So in our software's user interface, custom user interface, there's a couple of different options. The one that I'm referring to here is called the primary and the zone order management, right? So what that means is it affects these order labels, which can be executed directly from any zone. So when I click the exterior of a zone, buttons pop up and display, and then I can click either, it's called CT or TF, but essentially that stands for counter trend or trend following. And we can set them according to whatever our trade plan is, okay? So here we would have, of course, our supply stop. We would have our entry trigger line, which essentially means if touched, move the stop to break even plus commissions. And we have up to 3 targets, okay? All right, so I just kind of emphasize that a little bit to let you guys see that. Now, this, let me step out for just a second. Think of primary and secondary zones. I'm going to preface this, yeah? Primary and secondary zones. So that was 2 different zones and so on. But now I want you to think of primary and secondary order management, okay? So this, as I said, it's primary and or zone. So whatever settings I input, it's going to affect both of them. And if you see up here, there's a little plus sign. So that's where I can just simply click and then I can add orders directly to the chart. Okay. Actually, let me back up. I want to re-emphasize the primary and or zone order management. I forgot to say this and I apologize. The orders are submitted on the corresponding market. And that means, look, if I'm on the S&P futures contract, okay, and I submit anything from the primary, for all intents and purposes, is going to go to that corresponding market. In this case, in the example, it would be the S&P futures. Okay, this will make more sense as I go to the next slide. We also have secondary order management. Now you're thinking, what in the world do I need that for? Well, we have the same information, and of course I only displayed 1, but we can have up to 3 targets, same, and as well as a trigger line, all that is the same. I refer to these as the hedge, right? So the reason that I altered it to be primary and secondary was quite simply because we can make the primary and or the secondary go to any market that we want to. But for example purposes here, let's say that I'm trading the S&P E-mini futures, okay? Ticker symbol ES. So if I'm trading that, by the way, we're getting a breakdown right now on a DVD of 36.76 3/4. So I'm just going to keep my eye on that. That's what I was referring to a moment ago. It looks like we just hit it. Okay. But let's say that I'm trading the E-mini futures, the S&P. And I go, okay, well, you know, I love my position, absolutely, you know, have conviction in the maybe the long side of the market or what have you, but temporarily I want to hedge against my position. So I can do that all from the same chart. And in the example that I will give, I want to be long the E-mini, but I want to be short the micro E-mini, okay? Now I could short full, you know, if I have 1 contract of the E-mini, I could go short 10 contracts of the micro, it would be the same thing. Conversely, I could submit maybe half of a position. That's one of the great things about the micros is you can go, you know, half, a quarter, 3/4. I mean, whatever, 2/3, you get the point. So I could go submit 1 order on the E-mini, 5 or 1 contract, excuse me, 5 contracts on the micro E-mini, and I'm hedged now half of my position. okay? So there's many reasons why we would do this, and we'll be happy to talk more about that. But I wanted you to see the functionality. You're going to, you know, if you get into our free sessions, especially our community and what, but if you get, even if you get into the free session, we have one coming up, and we'll spend ample amounts of time on that, okay? Now, the orders from this are submitted on the hedge market, right? So there is a setting in our software that says, hey, what do you want that market to be? So if I were using the example I just gave, of course, I would set the hedge market and or the secondary, if you will, to the micro E-mini. All right. Trying to move as fast as I can because I really want you to see this on the live charts, right? And this is the push button order submission. It's very straightforward, very simple. I cannot tell you, I cannot begin to tell you how advantageous this has been for myself and many others. I don't want to speak for them. I'm just, you know, coming from the feedback and so on. But let's just say it from me. This is such a time saver. The other, you know, it's been a long time, but I even considered, hey, you know, maybe I should focus on, you know, where accounts. I don't want to dive too deep into that, but suffice to say, you know, you can't really. It's very difficult to get equities in NinjaTrader sometimes, right? Like you could go with Interactive Brokers as the broker, and there are options, but I mean, it's not ideal, I will say, because meaning Interactive Brokers, because you have to run certain programs in the background just so that the API can connect, right? So anyway, point is, I was considering maybe submitting some orders elsewhere and so on. I very quickly changed my mind. I mean, it is a nightmare when I go out and try to submit orders because I'm doing things so very fast, and the calculations that need to be made need to be done very abruptly, right? So all of it's done in a millisecond with our software in NinjaTrader. If I go elsewhere, you know, I really have to spend some time just placing an order. And I mean, quite frankly, that's the last thing I want to spend my time doing, right? Technology has come so far, you know, we shouldn't have to do that. And that's what the software does for me. Okay, so one other last thing that I'll touch on is our alert system. The other day in our live session, I gave many examples of how and why I would use this, but I will tell you, I'll give you a real example. So I can basically take and I can put these alert lines anywhere on the chart, right? I can also get alert. Actually, I'll go on to the next slide so you can see this here. Okay, I can also be alerted, email, SMS, you know, text messaging, or audible. Now, the reason that I'm going to give you this example is because it was pretty recent, and it certainly helped me out. But a lot of times, you know, things happen in the overnight or pre-market or what have you. I mean, have you guys and gals ever kind of sat there and you tried to, you know, you do your analysis and whatnot, and you're like, okay, I really want to buy the market or sell the market or this or that. But I really hope it doesn't happen in the overnight, you know? So you're thinking to yourself, maybe I'll get up in the morning and it'll be there and then I'll get to submit it. And then you wake up the next morning, of course, it's already happened and you got a huge move, the one that you wanted, of course. That's just how it goes, right? And so that's a thing of the past for us, because now not only can I be alerted to it, but as I told you before, I can actually set the, like for example, the continuations, if I want to do that, and which is what I did the other day. So I sat that and went to sleep. It was great because woke up the next morning and it was already underway. And so therefore, you know, being alerted to something, in my case, I didn't even have to be alerted to it, but the alerts in themselves will kind of achieve the same thing. Yes, I'm going to have to wake up, okay, but it'll send me a text message, or I can put my laptop beside the bed and let the audible alert go off, or however I want to do it. But yes, I can alert myself to any, you know, new zones, touching of the zones, new continuation patterns, touching of them. Again, I can just set random lines anywhere I want to, and so on. So, you know, I may get a bam, you know, or something in the middle of the night. Oh, I gotta, you know, let me wake up and place that trade and so on. So I know that this sounds kind of silly, or perhaps it does, but to me, this is a very critical part, because it helps with the efficiency, right? I don't want to miss. And that's always been one of my biggest issues, is I miss some of the things simply because they occur in the overnight or pre-market, etc. And so we resolved that. Certainly did not want that to happen. Okay, so that was it. I mean, that's not too bad, right? I'm going to go ahead and show you this before we get out to the chart. If you take this right now, and you know what? I'm so sorry. Let me do this. I'm going to get you the link. I don't want you guys and gals having to kind of run all over the place for it. Just 1 second, and I will post it. Let me see if I can get it into the chat. I think that's probably where I should post it. Yeah, there we go. Okay, so basically what that is, if you want to click on it, right, or what have you, of course we can send you an update following the presentation anyway, which is perfectly fine. We're happy to do that. But we want you to get into the free events and the free sessions so that we can answer and address many more questions based on time factor and so on. Also, we can go into much greater depth, and then you can see us put it into action. Our analysis or anything. If you want to see what we did that day, things to that extent, we can always answer real-time questions. So I just put that link in the chat there. Feel free to click that, and you can just go ahead and it's just a name and email. I think pretty typical. All right, very good. So that's going to occur on the 26th. That is the coming Wednesday at 9 a.m. Looking forward to it, by the way. All right, and here we go. So I'm going to throw this out there. I'm not one to spend very much time on this. I will tell you very clearly about that. Our goal is to help to the best of our ability, but we are a company. We do, of course, with the obvious statement, make money from sales. So let's just go ahead and put that out there and get it over with. All right, so the discounts, right? Everyone's typically interested in those. And the only time we really offer them is when we're doing a partner event or, excuse me, or a trusted resource event, something to that extent. Today, they're pretty awesome, actually. Meaning on a value basis. So here, what we're going to do today is if you've been waiting, maybe you want to purchase a zone suite or something to that extent, we're going to include the hedger at absolutely no additional cost, right? So generally that would come out to $19.96, but today it's only $14.97. Okay, you can use, actually you don't even need a code for that. Just let me know and I'll send you any information that you want, direct links, etc. Okay. And then our community. Remember earlier I mentioned we have a couple different things. We have the community, which does include the software, so you wouldn't want to do both. And then we have the software by itself for those who really don't need our training, okay? I will tell you folks, I mean, most of the people, probably 85 or more %, it's not an exact statistic, but it's from my experience, and it might even be more than that, but about 85 to 90% of the people coming through do want to get into our community. They want to learn our methodology and see how we put it into action. But again, I would just encourage you, if you really know how to trade supply and demand and you don't need us, that's absolutely wonderful, okay? But this is what you get today. And this has never been done, by the way. So on the monthly, the reason that we do that is for evaluation purposes, right? We don't want anyone to be unhappy or anything. We just want a great community. That's all we want. Great community filled with great folks, which is exactly what we feel that we have, especially the great folks, I mean. But anyway, if you wanted to jump in there and check it out for a month, you can do that literally 50% off. So again, we've never done that before. Can't tell you that we'll ever do it again, but happy to do it today. So the monthly, you can kind of see what you get there. If you want to go back and revisit this at any time, you can do that as well. But you do get access to the live room. You get the zone suite, a license for that. Now the hedger is not going to be included in that, right? So you would get the zone suite, but again, think of it's not necessary until you become maybe a little bit more advanced, or you want maybe you already do some hedging, or maybe you want to trade multiple markets from the simultaneous, trade simultaneous markets from the single chart, whatever your reason being. If you do the yearly, however, we will include the hedger, same in the lifetime, and the $24.98 would be the normal price, of course, $17.99.10, and then you can see $54.98 there, $43.98.40. Okay. Again, I don't want to spend too much time on this, but it is there. We'd love to have you. If you're considering joining, now would be the time. Okay. All right. Very good. So, couple slides that I would show you. This is our course material. It's pretty extensive, usually takes about 30+ hours to get through it. This is included in the yearly and the lifetime. And of course, as I said before, we have the live room. This is where we go through and we just walk through every step. Today we did a step-by-step, in fact, and just walked through every single step of every trade. So it's a how-to, right? It's like we take, this is the first step, this is the second step, so on and so forth. Okay? And then we just are trying to iterate here through the points. And probably the most important of all is that we feel we do have a wonderful community, the folks in it at least. All right, let's go ahead and take a moment and get out of the PowerPoint. How about that? All right. So I'm going to try to escape this. Hopefully I don't mess up. It's very possible, folks. Oh, nope, I did it. Awesome. All right, cool. So hopefully you are all seeing my charts now. I'm going to just go ahead and close the PowerPoint down. We don't really need that anymore. Please remember that code. I'm going to type this in for you. Is Expo. All right, there you go, folks. So that's in the chat now as well, and I will circle back to the questions. Okay, so I told you that we had some trades today, things like that. The way that we view the market is there's a couple different style of traders, right? So one is going to be your very short term, or not just a couple, but there's many different style traders. Suffice to say, you have your very short term traders, and then you have your longer, not long term, but I'm saying like your swing traders, your position and long term style traders. So we, on a daily basis, try to help everyone understand how our methodology works across all time frames. It's not just one, or it's across all. However, in the event that we go down to, say, the 3-minute chart, all right, I'll show you the trades, by the way. So this was the S&P. There it is. We had the trades on the 60-minute chart, which is what you're seeing right now, by the way. Okay, and then we had an if-then-else condition. So as I said before, all I had to do was go push the button. I could go here, push the button like so, and then literally just click it, and I'm done. Okay, so it's pretty much that easy. But and that's what we did today. So we left the room. We said, look, if this happens, okay, I'll be hitting the sell button, so on and so forth. And I just drew some lines on there for you. So the short term, you see the black line there. Actually, you know what? Let me do this for you. Make it a little bit. There we go. Okay. So this was the stop. This was the entry, trigger line, target, so on and so forth. Okay. On the bigger trade, which is to say the 60-minute, potentially we have some distance to go on the downside. So we'll see about that and see how it works out. All right, I'm going to put those back on for us. Very good. I would love for you all to just sit here, and watch, but unfortunately, given the time, we don't have that availability. But again, we will in the room. If you sit here and just watch this workout, and we did this morning, and we do it, pretty much every day. But if you just sit there and do nothing but watch it, I can tell you that it is my opinion alone, but it's absolutely amazing. I don't mean the software. I'm not trying to say the software is amazing or anything like that. I'm just trying to say the way that the levels are respected is amazing. So for all intents and purposes, right now, put this on your chart. Just watch it today. Yes, it's 204. We'll probably hit that. So just, we're on the NASDAQ, 11,125, 1146. Just, put it on your chart, see what happens when we get there. So it's very interesting, but I would expect, almost, not always, but the majority of the time, I'm expecting to see some reaction, like a bounce, right? And it's not always going to provide these astronomical moves, of course, but I at minimum expect, like this right here. It's a case in point. Now, we had already really tested this area, so I wouldn't expect a great deal from it. That being said, we still get, a good maybe 2-to-1 rally from it. So it's very interesting. So hopefully you'll be able to at least get into our room where we have a lot more time, and we'll focus in on some things like that. Okay. So going back to what I was referring to a moment ago about the difference in short-term versus swing and long-term, it doesn't matter when it comes to methodology, but location is critical. So whatever we do, if we do it on a 3-minute chart, we are obviously approaching the market from a short-term perspective. But that doesn't mean that we're necessarily going to change the location in which we're executing that in. Okay, so here we go. Watch for all intents and purposes right now. All right, this is actually kind of nice. It happened in real time. So number one, you can see we're revisiting this area, which we've already revisited before. Okay, So there again, on a bigger picture, this is a 60-minute chart. I wouldn't expect, you know, a huge rally out of this, but I do expect at least a pause, maybe even a bounce up, okay? So then if I go over here to the right chart, you can start to see what's already happening is an accumulation of order flow. And you can see how our software is printing that 11101. It's weird how I pronounce the numbers sometimes, I suppose. Anyway, 11101 half. And you see what's happening there with really not much to stop it, okay, from getting back to about 11. Oh, let me just put this. I don't need that anymore because that's where our target was. So what I'll do, so if, in other words, if we break this, we really don't have much to stop us from getting up to the 11113s, right? Things like that. So those are things that we'll look at in our live room. But again, it's all based on location. So let me throw this out there at you. Would I be buying this market? Would I execute this? Let me say that. Would I execute this long entry right there? No. To be crystal clear, no. Our analysis all day long was the exact opposite. Now, market started to rally, right? So that's producing emotions. Uh-oh, you know, I shouldn't be selling, I should be buying, right? No, absolutely not. The whole day it was telling us that, or at least in our analysis was telling us, the zone suite was saying, hey, no, consider on the sell side. So we had come up and we had revisited this supply level, but yet we've not neared demand, right? So typically what price would do is fluctuate, call it the gravitational pull, but it would go from demand to supply and supply demand and so on and so forth. Of course, that depends on the direction of the market as to which one is likely to get broken and or not, all right? But right now we're, you know, obviously quite bearish. We have been, if you scrunch up the chart, we have been for quite some time. So anytime we hit these supply levels on the larger picture like that, you're most likely going to get a reaction. Now, that being said, when we break it, I would pay very close attention to that, because when we do, it is likely to have a pretty good rally. Okay, so we're watching pretty closely, I will tell you that. But again, I would just want to repeat that we have had a very substantial decline, over 35% on the Dow, over 25% on the S&P, and this is just the way the markets function, as we all know, right? If it's happening on a 1-minute chart, though, it is way easier to mentally deal with as opposed to this, right? We've been dealing with this for 10 months. It is daunting for us all. I'm quite sure of that, all right? So I did say it yesterday. I was hoping to see some downside movement here. It looks like we are getting it, so that's very good. You can just kind of watch this. As I told you before, we have the trigger line. Now, I could go in. I have this currently set at 10,999, right? I can adjust that, and this is the beauty in our software. I can do anything at any time I want, right? But ultimately, what I'm trying to do is get just below this low. So in the event that it was to touch that, okay, what would happen is it will move this. I'll tell you what, here's what I'm going to do. Let's just do this, okay? Now watch what happens. Of course, it's the second that you want it to happen, it doesn't, right? Hey, it is what it is. I'm going to go ahead. I want this to happen because I want you to see the functionality of it, but let's just leave it as it is. It'll be fine. Let me see if I have some questions as that's happening. But what I want you to watch is the stop up here, okay? So what's going to happen when that trigger line is touched, it's automatically going to move that stop. And if it doesn't happen, it's fine. I'll move it up because I would like to show that here in the room, but let's just leave it as it is right now. Okay. All right. So let me get to, if there's some questions, I'm going to try to get to those really quick. Okay. All right. So yeah, now would be the time. If you do have a question, please let me know. I will address those as we speak, kind of while we're just sitting here watching this. Any questions at all, what have you. I think last time I was here, by the way, I sincerely apologize. I kind of had an incident where I couldn't get the Q&A to work or the chat or whatever it was, but I'm pretty confident I got it working today. All right, let's move that up. Okay. All right, yeah, watch real close right here. I don't see any questions coming in. I don't know if you happen to see any questions, would you please let me know? I hope I'm not missing any, but if I am, I certainly want to address them.
Sure, will
So
do. There was a couple of questions about the recording because a couple of attendees got late to your presentation, but the recording will be available today on our YouTube channel.
most excellent. Thank you as always. You're so very helpful. I really appreciate that. Okay, so guys and gals, what we're watching here, right, is, and we're about to end on the session. I think I have about 4 minutes. So hopefully this is excellent timing. At least you got to see this. I really wanted to share, you know, as always, there you go. Okay, so you can see the second, what happens when it touches that line. Now my hypothetical investment is protected, right? However you want to look at that. You can call it moving stops to break even plus commissions, you know, what have you, but ultimately that's what it's doing. Okay, so now let me scrunch this down and I'll show you. You can see the target's way down here, 10,185, right? So it's a personality trait, right? Earlier we were talking about, you know, short term versus longer term and so on and so forth. Well, everyone has a different personality trait when it comes to this. Some people really prefer day trading and scalping and so on. I, however, am the exact opposite. And maybe it's just because I'm not good enough. I don't know. But it's not, it makes me work really hard for the same or less, right, than the bigger pictures. And so maybe, I don't know, over time I just, I veered away from it. And I think it was the same for me when this was so many years ago when I was, you know, trying to scalp and so on. But for me, it just wasn't great. I will tell you, today's a very different time than then. Back then, I too was just trying to kind of do too much, right? Nowadays, as you know, people see in the room, we do this every day. I think we had, was it 2 today? I believe there was 2 yesterday, maybe 1 today. I can't recall exactly, but you're welcome to get in there and check it out. So the point that I'm making is, by experience over time, it's taught me that yes, okay, you could scalp, absolutely, but not as frequently as I did before, right? Because what I would do is get an entry signal, I would get excited, you know, I would get that emotion, and I would want to execute that trade. And I was doing that too often. Well, nowadays, of course, that's just not okay, right? For me, I mean, so I will practice patience, things to that extent. Like this morning, let me give you a perfect example. This trade up here, right? Remember, well, you wouldn't know, I guess, if you're not in the room, but we started our session about here, okay? So from that point, we said very specifically this morning, I need to see price rally. I don't want to see it go down. This is not working for us. I need it to go up, right? So which is ironic because you're talking about selling, you'd think you'd want it to go down, but it's the exact opposite. I wanted price to go up. So we talk about it, and then we produce the if then else conclusions. And look at how long we had to wait, right? So if we move forward in time, this didn't come in until approximately 10:30. So that was about an hour and a half that we're sitting there just doing nothing because there's nothing to do. And so I think over time that has helped me tremendously. Now, that being said, and I'll conclude with this, I still don't want to scalp. So I do it in the room. I day trade, I scalp in the room, you know, with simulation, of course, and I do that for learning purposes because you can expedite the learning curve. You have to. You got seeing is believing, right? That's what I always tell people. But I still, you know, I'm an avid advocate, if you will, of swing trading. So if any of you would like to have some conversations about that, please let me know. I appreciate your time today. I thoroughly enjoyed it. I hope you did. And I hope that you enjoyed seeing the software, but do try to get into our free sessions. So what we can do is just sit there and watch it in real time. And I think you'll be pleasantly surprised at how it actually functions. So again, just kind of put that on your chart, you know, remember it for the day. Thank you so much. I'm going to turn it back over. God bless you all.